Most of us Indians have very simple financial needs. We need to borrow money, we want to buy insurance for our families, we make payments, and whatever money we have left over, we like to invest. And a lot of this experience traditionally has been scattered all over. So I think that's a massive gap. This is where Freo has innovated. We've created flexible ticket-sized products across these core verticals. People said this is not going to work. We have more than 30 million users who have tried out our product through multiple channels and more than 3 million people who are actively transacting. The one thing which I've learned is the biggest thing in entrepreneurship, that is the self-discovery journey.
Hello everybody and welcome to yet another episode of PayU's Let's Talk Scale. This is a show where we feature companies that have scaled in extremely tough sectors. And today we have Kunal Varma, who's the CEO and co-founder of Freo. Kunal, welcome to the show.
Thank you for having me, Swapnil. Pleasure.
For somebody that may not know anything about Freo, what is Freo?
So Freo is a digital banking platform. The idea of Freo is that most of us Indians have very simple financial needs. We need to borrow money, we want to buy insurance for our families, we make payments, we make purchases, and whatever money we have left over, we like to invest. And a lot of this experience traditionally has been scattered all over. Some of these require walking into bank branches. Our vision was to put all of this in a very simplified, flexible manner in one place, digitally, such that a common Indian like such as myself should be just able to flip out their phones and be able to borrow, pay, buy insurance and invest, all on the same platform, while reducing the clutter and the inconvenience of existing services.
Got it.
That's what Freo does.
Where did the idea come from?
So we knew that financial services are going to completely change. And how people interact with money is going to take a complete turn from what it has been all our lives growing up. We spent a lot of time speaking to our potential customers, and we realized that there was an opportunity to make life easier for them and to do it all digitally, using the advantages of the digital public infrastructure such as Aadhaar and India Stack that was just coming up. So we were one of the first movers in that space. So we innovated first on credit. And as we got better at doing that, we realized that we understood the customer much better. We saw that the customer had needs beyond just borrowing money. And I think that's where the vision of Freo came about, wherein we said that while we can help customers borrow money in a flexible, affordable and convenient manner, why stop at that? We actually have the ability to do what a bank potentially does.
Tell me the numbers that you can share with us, because from what we understand, you've managed to scale this venture quite a bit. Where do you stand as of today on your numbers?
Today, we are at a scale where our gross revenue at a platform level has crossed 350 odd crores. We have more than 30 million users who have tried out our product through multiple channels, and more than 3 million people who are actively transacting. Either they are borrowing money, either they are using our UPI to make payments, either they are purchasing insurance, and some of them are even trying out our investment products. And I think in terms of the footprint, we're able to reach out to customers in about 95% of India's pin codes, which is about close to around 19,000 pin codes where Freo is available for use today. And this spans a little over 1,200 cities and towns. And 80% of the new growth that we are getting is now coming from tier 2 and tier 3. And we believe that the growth in our customer base, even at this scale, is maybe about 60 to 70% year-on-year growth on the customer base. And we're doing all of this while being very mindful of the basics of business, which is, at the end of the day, we all have to make money. So we've today, as business at scale, we are now at a break-even point. We are turned profitable.
So what makes you all different from a bank, and what makes you all different from the other neo-banking players that are there? But first answer the bank, private bank question.
Yeah, I think one of the biggest things that we are doing is we are taking the product to the customer where the banks are not necessarily leading the charge. One of the bigger problems that we have seen in the industry is some of the customers who want access to these products. Unfortunately, a lot of banks are unable to service them. Either because the customer's profile doesn't meet the threshold or the criteria, or the banks have set processes as incumbents, and they might not have evolved fast enough. So I think that's a massive gap. So if I were to look at India at let's say 140 crore people, the banks are heavily, I would say over competitive in the top 5 to 7 crore Indians. And then possibly expanded to the next 10 to 15 crore Indians. But once you go beyond the top 15 crore Indians, there is a massive void. The penetration is very, very sparse. Customers don't get what they need. There are products available, but they don't really align with their needs. A person living in a tier 2 city earning 45,000 rupee per month may not always need the kind of a loan that a typical bank would offer, which is a minimum of 3 lakh, 4 lakh rupee loan. This is where Freo has innovated. We've created flexible ticket-sized products across these core verticals, which has allowed us to differentiate heavily from banks.
What is that brilliant way of monetizing? To share the secret sauce.
Sure, like the saying goes, a good scare is worth more than good advice. So people said this is not going to work. They kind of scared me into saying that, look, you're not going to be able to make it. So that was very helpful. But there was one advice that I got, which was around monetization. Which was that within starting a financial services business, if you don't know how to make money in year 1, then I think you're doing something fundamentally wrong, which is not true to financial services business. So I think one big identity question that we answered very early on is, are we going to be a tech company with financial services for monetizing, or are we going to be a financial services business with a core tech DNA which helps us do things better? We are the latter. So at the end of the day, we think of ourselves as a financial services business with a very strong culture of using technology. And when we did that, all our products from day one when we launched, we answered the question of what does the customer pay? And what do we spend? And what we spend has to be less than what the customer pays. And that has to be true for the very first customer, not for the millionth customer. So I cannot subsidize or keep the product free or give cashbacks or discounts, which we love as Indians. And it's okay if there's a lot of free money going around. But we chose to answer that question very early on.
You spoke about tech. How big is the role has tech played and AI played in you being able to scale up to the numbers that you have scaled up to?
So I think tech has been a phenomenal enabler. AI, I would say, is a very recent phenomenon. Machine learning has been in the past. Now, I'm an engineer. In my previous life before an entrepreneur, I used to write code. So I understand technology as much as any engineer could. And I can say this for a fact that when you're trying to build a product or a business, if you're building for the long term, you need to create systems and processes which allow you to have some non-linear operating advantages. Now, one of the traps that as Indians we fall in is that we can always throw warm bodies at a problem because we have so many of those. And we decided that we would not do that. So the choice of product, the choice of partnerships, the choice of positioning that we made was such that it would force us to use our core technology DNA. When we started doing that, one of the things that very interestingly played out for us is that over the first 5 years, obviously, your team grows. We were like founders and then 7 people, 20 people, 50, 80 kind of stuff. But 5 to 6 years in, the growth in the headcount was not more than 5% a year, maximum. But the business was growing in double digits. Today, if I look at my customer base growth, business scale growth, and my headcount growth, my headcount has grown less than 5% per year in the last 2 years. Whereas I have doubled my customer base in the same period.
Got it.
And that has happened because my entire infrastructure has been tech enabled.
Got it.
At the same time, we've also worked with partners who have shared the common understanding that technology is at the core of creating fast, reliable, scalable systems.
Got it.
So I think major role. And then I think machine learning kicked in for us in a big way, wherein we did not have to rely on smart people remembering decision and business rules and then applying heuristic logic. Instead of that, we started using machine learning algorithms where our systems could just consume data and become better at decision making, such as credit and payments and stuff like that. AI, I would say, in the past 12 to 15 months has been phenomenal. We've been very quiet about it. This is probably, one of the first few places where I'm really openly talking about it. But we've been fairly quiet about the fact that we've heavily deployed AI in interacting with customers. So a lot of our customer-facing interaction, which are traditionally been operationally heavy aspects of the business, there it's our AI agents, which are actually interacting with customers and doing a phenomenal job and doing it in multiple Indian languages.
Yeah.
We've just been very quiet about it because we said, look, I think, this has to be happening for every customer across the ecosystem.
Got it.
So yeah, I think very excited about how it's going to play out, but I would say AI is early days.
You spoke about the right partners. You are a PayU partner, of course. So tell us a little about the PayU partnership and how that has played out for you, how that's helped your brand.
Yes, PayU is an important partner for us. I think there are some partnerships that we look at which have been transactional and some partnerships which we believe are more strategic in nature in the sense that they are enablers of our growth. And they are key in us being able to offer the customers what we want to offer. So they are important. I think PayU is one of the important pillars of our ecosystem. The payment gateway on the payment side and basically the different payment services is something that we have relied on a lot for PayU. In addition to that, we are also today talking to different teams to see how we can deepen the partnership. So we see that the understanding of the tech stack, the architecture, the product experience that we have is also shared by the PayU team. So we kind of derive a lot of comfort in that. I must confess that when we started out by having some partners onboarded, at that time, PayU was not our first partner. We did have other partners, but eventually, when we were thinking of alternatives and exploring, and we started working with the PayU product, we really liked it.
Yeah.
And we thought it is about time for us to get into a good partnership. I think there is a lot of potential for us to do even more in the entire transaction ecosystem.
Got it.
And hopefully the team should be able to create a much deeper, I would say, operating stack with PayU across different verticals beyond the payment services that we rely on.
Got it. You spoke about you going after not just the tier 1 customer, but also your tier 2, tier 3 cities across India.
Yeah.
Is there any difference in the behavior that you've noticed in a tier 1 city versus a tier 2 city in India? Or do you think across socioeconomic brackets, it's all the same?
Oh, that's
Tough one.
such a loaded question. I mean, one could talk about it, over like 3 mugs of coffee.
But tell me what is similar and tell me what's different.
Sure. I think the one thing which is similar right off the bat is the tech savviness. The comfort with which a customer in a tier 1 location is able to try a new product. That comfort is very similar that we see in a customer from a tier 2 or a tier 3 location. There is no hesitation. Whether it is consuming content, whether it is media, whether it is a shopping experience, whether it is financial services, travel. We've looked at customer behavior, we've spent time with our customers, and the customer's willingness and openness to try out and be technology savvy about something is interestingly very similar.
Got it.
Very, very similar. One obvious difference that we see is people's expectations are very different. So if you offer the product in different languages, I think the take rate is higher. The adoption is much faster. Because it's much easier for a customer to try something new when the conversation with the product is more it's intuitive. So I think vernacular or local languages is a big enabler, and that's a difference, because I think the same people, when they move to a tier 1 location, they somehow to a large extent end up dropping their expectation, because they think that only having the product in English is par for course. But I think we've seen that the vernacular bit plays out disproportionately higher in tier 2, tier 3 locations. The other thing we've seen is that in tier 2 and tier 3, people are they're far more sticky with product if you can provide genuine value, which is different from customers from tier 1, because I think we see a lot of very high switching. So I think while I think we've been lucky with a very high NPS, Net Promoter Score, with our product being on an average 55 or so for financial services, as against a lot of banks which hover in the 30-ish range. So we've been high in the sense that the product customer marriage has lasted better for us across the board. But I think the switching is far more in tier 1 as compared to tier 2 and tier 3, where people stick around. I think the underlying point being, if you provide value.
Got it. Tech savviness is the same across tier 1 and tier 2. Vernaculars work much better in tier 2 versus tier 1.
Yeah.
And if you could call it loyalty towards the product, you see a lot more loyalty amongst tier 2, tier 3 cities as compared to tier 1, where switching could be done more often to your product.
It's probably also related to your earlier point, Swapnil, which is that how are we different from banks?
Yeah.
Wherein if the banks are kind of overcrowding the entire customer space in tier 1 versus they're doing less in tier 2, tier 3, that probably allows for us to create a much more loyal customer base. It probably could be related to that in a big way.
Absolutely. This is your second venture. I want you to share 2 or 3 things that you think are extremely important for any entrepreneurs, professional, anybody that's starting a company or has a company that really wants to scale it like you have scaled with your team Freo. Tough one?
It's scary to be prescriptive because I think every entrepreneur's journey is different. The one thing which I've learned is entrepreneurship, the biggest thing in entrepreneurship, that is a self-discovery journey.
Yeah.
What I know about myself today, by virtue of being an entrepreneur, I did not know 10 years ago.
Got it.
Or let's say 15 years ago. I've now been an entrepreneur now for 17 years now.
Yeah.
So I think you should be very, very prudent about understanding what risk is and how much of that you're willing to take at which stage in your life.
Yeah.
So people sometimes right out of college want to jump into a business.
Yeah.
And I think hats off to those who really, really are committed.
Yeah.
But if you're not sure, then you're better off actually working at a large place first, getting some kind of a cash cushion and some experience, and then figuring out.
Yeah.
So I think the over-indexing on risk-taking is not something I would advise.
Yeah.
You have to be smart about it.
Yeah.
Most of us as entrepreneurs become smart at risk management, not risk-taking.
Absolutely.
People who become good at risk-taking but are not good at risk management, ultimately risk wins and you kind of fail.
That's a good way of putting it. Final question.
Yeah.
If I were to meet you 5 years down the line, where will your company be at? What are some numbers you're looking at, or what's the big aspiration that you have?
Well, my idea of building Freo is that this has to be a household name. It should truly be something that an Indian wakes up in the morning and says that, look, today I need to borrow some money. I need to buy a short-term health insurance just for 3 months. I need to take a personal accident insurance because school holidays are starting and I'm planning to do road trips with my family. So let me take road accident insurance and let me do this. I have some surplus money. Let me invest very quickly. Whenever a common Indian thinks of these basic needs every now and then, they should be able to say, okay, fine, I'll do it on Freo.
Yeah.
That's my desire. So I think that's my ultimate desire for Freo, to be able to serve Indians and become a household name. I would love for some other milestones, which are, I'll be happy if I'm able to take the company public, if I'm able to. And then, I think along the way, having helped done a lot for the career of all my colleagues, they should be able to say that, look, they've actually been part of something where they've built something phenomenal. Hopefully you'll find me a little bit more at peace, maybe be able to take more breaks personally, which I don't. But something like that.
Kunal, you spoke about being clear about the why. I think you're an entrepreneur that seems like you're clear about your why while you're building Freo. I hope when I meet you in the next 5 years, you are that household name that everybody wakes up to for their financial needs. In my brief interaction with you, I get the feeling that you'll definitely be there with your team in 5 years.
Thank you so much, Swapnil.
Thank you.
Pleasure.
Pleasure talking to you.
Absolutely. Thank you.